In this week's video and podcast, I'm going to share with you two trades that I've taken, one on the monthly chart, one on the weekly chart. One's a reversal, one's a continuation, one's a Forex trade, one's a non-Forex market. Let's get into that and share those trades right now. Hey there, traders. It's Andrew Mitchem here at the Forex Trading Coach for video and podcast number 544. Loving the feedback that we're getting regarding the changes that we've made here, and by showing you trades and just helping people to understand what the market's doing and to understand how we trade here at the Forex Trading Coach. Don't forget, we always promote very low risk per trade, high reward to risk, and the strategy works across all time frame charts and all different markets. Now, today is a great example of that. I'm going to run through two trades for you, the New Zealand US dollar on a monthly chart and the German 40 index on a weekly chart. So let's jump straight onto the charts here, and you can see the two trades I want to cover. The first one here is a monthly chart trade that's just hit the profit target this week. This is the New Zealand dollar US dollar weekly chart. So going back here, this is the monthly chart. So this is the candle here that closed in February for the January candle. So that's January of 2024. And we decided to take the trade heading into the 1st of February when the January candle closed. And you can see in here, my trade was not actually filled until the 20th because I take limit orders. So I'm looking to take a sell trade after this candle has closed, but I'm only looking at taking the sell trade if the price first retraces. Now, I don't need to be sitting there waiting for 20 days for the price to retrace. On the 1st of February, I put my orders in. If within the first candle, in this case, the 1 month, the price retraces to my entry level, fantastic. It then takes me on a sell limit, looking for the price to then fall. Now, you can see in here that the market opened on this candle at 0.6110, and my entry level was 61.62, so some 52 pips higher. And you can see that the price pulled back up here, got me filled at my entry level, and the stop loss was fine. It remained in the market, and then the price fell away. By the end of February, we were into some good profit. You can see the advantage of entering back up here using limit orders. By the close of the month, we were already up 92 pips roughly. And then what happened going into the month of March, the price then came back up, tested that same level. Notice how it stopped at the same level. We're still safe. By the completion of March, we then ended up being around about 188 pips up. And then the profit target was hit down here on the 15th of March, 15th of April, just a few days ago at 59.05. So a few things to notice there. One, we're at before the round number of 59.00, but also using the way that we trade with our entry and exit levels, we had a great profit target. Now, if you look at rough numbers, looking at the, without calculating these exact, but there's roughly our entry level. Our stop loss was at 62.22. Which is in around about here, and that was about 60 pips, 65 pips, and our profit target was in here at 0.5, which was down in around about there, 257 pips. You can see the exact trade down here, but you get the idea of the reward to risk involved there. You know, it's about a sort of, what's that, about a 4-to-1, top of my head figures there, reward to risk. So that's the trade, a continuation pattern, because we're in a big downtrend, a pullback, downtrend again, another pullback, but overall we're in a big downtrend, and then we take the sell trade here. Great trade. What you will notice if you have a look at my profit on this trade is have a look here. There were two more trades on the weekly charts that both lost. Now, that shows the importance of reward to risk, because you can see both these trades were pretty much the same profit or loss, in this case, both losing trades, but very small, low control. But when we have a profitable trade, it's multiple times the risk. Really important to see that. Moving on to the second trade. So that was the monthly continuation. The next trade is this German 40 index at the bottom here. So this just shows that our strategy works different time frames, and it also works on different markets. Now, this is a reversal trade because we've had this enormous uptrend on the German 40 index, and then we had this outside candle here forming a new swing high. We love to look for N shapes for reversals. Imagine a letter N in here. Now, my charts, as I've mentioned the last few weeks, I have more indicators on here. I have a candle identifier indicator. I look at Bollinger Bands, Fibonacci levels, etc. On top of this, and divergence. So all these things on top, but for the purpose of this video and podcast, we just strip everything back to make you focus on the candle pattern, which is really important here. We then look at does the trade have stop loss protection? Is it in the right part of the chart? Have we got room to move for our profit target? All those things on top. But just the absolute basics to identify this trade was the candle pattern here on the German 40. You can see the trade down here. Again, high reward to risk. So this is a reversal, big uptrend. We're then taking a sell limit, looking for the price to first open, go up, and then fall. Now, same thing here. If you look at the open of that candle in here, it's roughly around, 18,222. My entry level is 18,293. So I'm needing the price to pull back up first, and then when it hits that level, then reverse. And you can see exactly what that's done. And again, it's just recently closed at 17,807, which is in just above where we are right now. So you can see as a reversal trade, I'm not needing this to come all the way back down here. We just have a specific profit target in mind that we're looking for there, and this, because of the nature of the way we enter and exit, gives us those high reward to risk trades, as you can see here. So reversal trade there on the weekly chart, continuation trade here on the monthly chart, both profitable, both high reward to risks. If you're out there looking for a Forex broker, I can highly recommend Blueberry Markets. I've been with Blueberry Markets for years and years. Great bunch of people and great charting software, lots of markets as well. They're really, really good. I'll put a link to Blueberry Markets so you can open an MT4 or MT5 account with them. And the other thing, if you've not been on my free 1-hour masterclass, it's an on-demand masterclass. It takes you through kind of similar to as I've just shown you here, but lots more examples about what we do, how we trade, etc. Give yourself an hour to jump onto that. I'll put a link to that as well. If you're out there looking to learn how to trade, look no further than us. We've been trading. I've been trading myself for about 20 years and coaching for 15 years. Very proud of the way that we have built up the Forex Trading Coach over the years to help so many people from all parts of the world to be successful. By the way, both these trades that I've shared with you here, the 2 winning trades and the 2 losing trades, were all on our membership site for our clients to follow and to learn from and to earn from. So that's it for this week. I look forward to catching up with you this time next week with some more trades to share with you. And any questions you have, please send me an email directly, andrew@theforextradingcoach.com. If you're on YouTube, please like, share, subscribe. And if you're on the podcast, hope you enjoyed listening. And hopefully you can get to look at these trades on your charts as well. I'll see you this time next week. Bye for now.